Welcome everyone to Real Life Trading. My name is Brad Reed, and I'd like to remind you to be good. By good, I mean get out of debt, achieve your financial dreams, and give generously to your community. The mission at Real Life Trading, I forgot to say that, is to enrich lives. We are in a bearish day trade here on CRC, which is actually moving pretty nicely after giving us a scare at the beginning. But Angela asked me to record a video, and it's a question I've got from many traders about a new factor that we've sort of put into our trading plan over the last couple of months. Now, when we trade bearish, we've built into, at least I've built into my trading plan, only to trade the breakdown of a bullish candle. So again, when I'm trading bearish, I want the stock to go down. The reason I day trade bearish is because when there's a saying, the bear jumps out the window, but the bull creeps up the stairs. And all that means is that when the stock goes down, it tends to go down faster than when it goes up. So it tends to go up slowly and go down quickly. So if I'm planning on being in a trade for 15 minutes to 2 or 3 hours, I want it to go quickly. Bearish is that direction. So if we are trading bearish, the tip is to, and I guess I'll just type this out here. When trading bearish, enter on the breakdown of a bullish candle. And I'm going to say this is just one element of the trading plan, not the whole thing. Right? So when trading bearish, enter on the breakdown of a bullish candle. So let's just go through and talk about a few examples of what that would look like. And let's see. So I am going to, I guess I'm going to go ahead and use the same green and red lines that I have. So I hope this doesn't get too confusing. But the first bullish candle, this white-bodied candle on the screen here, is over here. And again, let's see, looking at CRC, California Resources, and today is March 8th of 2017. So if you want to go back and check the charts and see what happened on this trade setup, you're more than welcome to. But so what we would be doing is, if we were watching this candle by candle, we would either trade it, cancel it, or readjust the trade. So when we saw this first bullish candle, the breakdown of this candle, let's see, the low of that candle was 1644, so our entry probably would have been at 1643. The high of this candle is 1680, so our protective stop would have been at 1681. Now this, of course, assumes that we ignore everything else on our trading plan. So I just want to talk about this one element. The first thing that happened is that the next candle poked through the top, so I probably would have raised this to be 1 penny above the top of that next candle. And then when we look at this trade setup, we can say, okay, I would be profitable on this trade setup. Cool. So if we look at the next bullish candle, which was this one down here, we can see that this one would have triggered us in and then stopped us out. So the first one would have been a win. The second one would have been a loss. This third bullish candle, if we had traded that, it would have, let's see, the entry would have been 1629. And yeah, so we would have gotten triggered in on this third candle right here, and we would be profitable. If we had not done that, we would have traded this next bullish candle, which is this one right here. We would have been profitable. If we had traded this bullish candle, if we would have traded the breakdown of that candle, we would have been profitable. And again, as you can see, I'm just going candle by candle and trying to decide, would I be profitable? Would I have canceled the trade, or would I have taken a loss if I trade the breakdown of every single bullish candle I see after a stock gaps down? So again, the key is the stock gaps down, so I believe it has a bearish edge, and I want to wait and trade the breakdown of each bullish candle. So the next bullish candle was this one that looks kind of like a doji way down here, and if I would have had my entry and stop there, the first thing it would have done was triggered through the stop, so I could have raised the stop, and as you see, I would have been profitable. And if I would have put the entry there below that next candle and traded through that, I would also be profitable, probably be up about 2R. So for the course of CRC, at least today, if I had traded the breakdown of every single bearish candle, I would either have been profitable, I would have canceled the trade, or I would have lost one time. So I would have lost one time, been profitable many times, and or canceled the trade once or twice. So Angela, and to the other folks here in the chat room, does that make sense on what I mean by trade the breakdown of the bullish candle if you're looking for a bearish setup? Again, the entry would be just below the bullish candle. The protective stop would be above the recent swing high. And yeah, you just take it bearish. Again, that is not the complete strategy. That's only one element. But again, the idea is if you do have a bullish candle like this one, it represents buying. Now, those buyers can be two people or two types of people, right? They could be buyers that that sold short up here and they need to close out their position, so they buy to close. Now, if the bullish candle is short sellers that bought to close, and you get in with this breakdown, then they will not be around to buy to close down here, right? They won't be buying here because they bought before you got in. Now, on the other hand, if, say, on this candle, if these people are, instead of short sellers buying to close, maybe these are people buying here because they think it's going to continue going bullish. If those are the types of buyers, well, when it breaks down below that candle, those people are going to be losing money. And when people lose money, they tend to close out their position. And in order to do that, they would have to sell to close out their position. And that would send the stock down lower. So either way, whether it's short sellers buying to close or long traders, bullish traders looking to take the stock going up, if you trade are bearish, the breakdown of those bullish candles tend to be pretty successful. Now, I wanted to have a bullish example, but I didn't. Shoot, I should have gotten that ready before I started the video. Any traders in the room have a stock that they're watching to go bullish? Let me come over here to my gap list, and I'm going to click gap up. By the way, this is barchart.com. It's a public website. Looks like H&R Block gapped bullish. So did Citigroup. Let's take a look at Citigroup because I looked at HRB already. Zane says Momo or SKM are good examples. Citigroup is a good example, but Zane says Momo. All right, so this is, all right, let's check the volume, make sure it's over 1 million shares. It is, okay, so trades more than 1 million shares a day, had a bullish gap up, a little bit extended, probably would not have traded this one. Let me check it, SKM. I like this one a little bit better. Volume's too low. Let's go back to Momo. Okay, so ticker MOMO, again, today is March 8th, 2017. Let's take a look at this on a 5-minute chart. Now, since this one is trading bullish, we have a bullish edge. We're going to trade the breakout of each bearish candle. We're not going to trade it. We're just going to look and see what would have happened. So it looks like this one is the first example of a bearish candle. And I say bearish because it has a black body in there. The closing price was lower than the opening price, and that's what defines it as bearish. So if we would have traded the breakout, right, when the stock breaks out through the top of that bearish candle, we would have been profitable. Now the question is, would we have been able to come out break even or maybe make a slight profit on this one? Probably. I don't think that's quite 2R. So I would say we'd be mildly profitable or break even on that one. Tell you what, just to be pessimistic, let's say break even. Now this is the next bearish candle. If we would have traded that one, we would have lost. On this next, the third bearish candle, if we would have traded that, we would not have been in. We just would have canceled the trade. The next candle would have canceled it, right? I say canceled it because the stock went through the protective stop before it went through the trigger. So every time the stock goes down through the protective stop, we would just cancel and look to readjust. Zane says, also, do dojis count? Zane, for this example in this video, I'm going to say dojis do not count. But if the close of the candle is lower than the open, then I'm going to call that a bearish candle for the purpose of this example. So the next one would be here. We would have canceled it. Next one would be there. We would have canceled it. We would have canceled all of those. Would we have? So the high of that candle is 32.51. We did not. Yeah, we did. We hit 32.52. So there's another one. That would have been a loss. And then this one, we would be, oops, sorry, I got those lines reversed. We would be in this one right now, and it looks to me to be more bullish than bearish. Right now, it has not gone through either, but these moving averages are coming up. The volume weighted average price is coming up. Again, I can't say whether we're profitable or not because this trade has not yet finished, but we can also say the next setup would be that one. So if you do this over and over and over again, and if you choose to add this to your trading plan, I would encourage you to have at least 50 to 100 examples before you make it a permanent part of your plan. I think you'll find that more often than not, when you have a bullish edge, when a stock gaps bullish, if you are going to place a trade, look for the breakout of a bearish candle. If a stock has gapped bearish, like CRC gapped bearish here on the daily, if you're looking bearish, look to trade the breakdown of a bullish candle. Wow, we just hit target 2. Sweet. So again, yeah, if you're trading bearish, look for the breakdown of a bullish candle, and that will, yeah, that should add some validity and some solidity to your trading. So if you have any questions, email me. My email address is brad@reallifetrading.com. brad@reallifetrading.com. If you want more videos like this, swing on over to www.reallifetrading.com. We have a ton of free videos all about how to trade, whether you are a seasoned veteran, whether you are brand new to trading, and if you want to do credit spreads, if you want to do callers, sell covered calls, buy protective puts, if you want to buy directional options, if you want to learn how to day trade options, all of our education is free right over here at reallifetrading.com. Maybe I can click on it and show the website. Oh, that tab's in the wrong way. There we go. So folks, again, thanks for watching this video. Come on over here to reallifetrading.com for more information. And as always, trade on logic, not on hope. Have a good one, everybody.